Good morning, friends. So, this is a new month. Today is the 1st August of 2024, and today we are going to analyze the Nifty market. And the first step of analyzing the market is to get to know what market structure the chart is telling us. So, for that, I am using a indicator higher, high, lower, low, and I am changing the time frame to 1 hour. And in 1 hour, it is in a uptrend because it break the previous high, that is that was in a higher high, and it made a new high, and we can expect bullish move in 1 hour. We can say market is in 1 hour, bullish in 1 hour. So we get the market structure. Then then we are looking for the liquidity zones. So we are looking for the liquidity zones. First we mark the sell side, that is the liquidity zones in the bottom level. So we can mark this as a sell side. The first sell side we can mark this line because the market is taking supports, many supports here, and people may take trade from here, bullish trades from here, and they may put their stop loss here. So market may come to take this stop loss or stop loss orders for liquidity. That what is our concept says us. So this is the first sell side we are marking. And second sell side we can mark if the market take this liquidity, it may come to this level also, because some people with a safer mindset may take trade from here only, so they will put their stop loss orders here. So there is liquidity, market may come to take this order also. So we go to sell side primary, we are looking for this sell side, and if the market sustains below this, we can check for this sell side also. And we are marking this as our buy side because the market is taking resistance here, and people tend to take bearish trades from here, thinking market may reverse from here. So what market usually do is market tend to take these stop loss. People take trade from here and put their stop loss orders here. So market may come to take these stop loss orders. So we are marking this as the buy side because this is the zone where people think market will reverse. So we should think as a big money people. We should think like big money people. They will do, they will take the market to some level up to take the stop loss of retail people. So we are marking this as our sell side, and we are going to 15 minutes. What 15 minutes chart says us the same thing, because here we can change this sell side to this point, because this is very short, very short area to travel from market to travel from here to here. So we can change this sell side to this side, because people usually don't take trades from here and keep stop loss here. Usually they take the stop loss from here, at least from this point, and make the stop loss here, because if they take the trade from here, they don't get much profit, because this is a resistance, right? So taking a trade from here to here is not that worth. So people, most of the people won't take that thing. So we can make the sell side here, over here. So we can assume that market will come to this area, and if if I will only take the trade if the market uh, cross this area, because this also people will tend to take a trade here, but they will definitely put their stop loss here only. Don't They will not put their stop loss here, they will put their stop loss here only, because this is the zone where market take multiple support. So I'm avoiding this thing, and I'm keeping this sell side only. Okay. So in 1 hour we marked a sell side here, but we got to know that here we marked, but in 15 minutes we got to know the distance between the sell side are very low. So we mark this sell side only. It's better to mark only one side always, but if the distance between the cell sides are more, we can mark one more cell side. But here in 15 minutes we didn't get a proper sell side in between this, so we are keeping this as only the sell side. Okay, so we are going to analyze or plan our trade. Next we are going to plan our trade. The first trade will be if the market goes up above the buy side and take all the liquidity and comes back, sweep back to the zone. I will take a trade when the market retraces at least to the 0.5 of this fall, and if I get a gap here, that may be FEG gap, maybe inversion FEG, maybe order block or market break, anything, any gap or a volume imbalance, anything. If a gap is here in the above the 0.5 level, I will take a trade from here. Usually I take my 50% quantity if I am taking from 0.5 level, and I am taking the full quantity from 0.6 to 0.7 level. That is my trading rule is. So the market, if the markets go up and comes down, and it should give a character change in at least 5 minutes. That means it should give a new low in 5 minutes. The market should break the previous low and it should give a new low, that is a market character change in 5 minutes. After we get the change, the market may retrace, and if the market retrace to at least 0.5 level, and if we have a gap there, we will take the trade, a bearish trade from here to here. Here is the liquidity zone, below the below liquidity zone, the sell side. It will come to the liquidity zone. That's what we think, and we will take a trade here, the cream area. In this area we will take a trade. This is my first plan. And my second plan is, if the market goes up and it consolidate here, it may give me a new high and it will retrace here. I will take a bullish trade. The market should give me a new character change here, breaking through this buy side, and it should consolidate. It should not come back immediately. It should consolidate here and it will give me a new character change or a break of structure here, at least in 5 minutes, and it will retrace. If it retrace to the 0.5 level, I will take a trade again. If it retrace back to 0.5 level and I get a gap here, I will take a trade with my 50% quantity. And if the market retrace back to the 0.6 or 0.7, the golden zone, and I get a gap, I will go for the full quantity. This is my second trade. And my third planning is, if the market comes below this sell side and immediately it retrace back to bounce back to the zone, and if it give me a retracement, I will take a trade to this point, a bullish trade. This is my third trade. And my fourth trade will be, if the market gives me a character change by coming back to the sell side, and it consolidate here and give me a new character change or a break of structure, and it retrace back, I will take a bearish trade. These are my 4 trades today I'm planning to do, and usually I do mark alerts in my sell side and buy side. So I get alerted when the sell side and buy side is taken. So only that time I will check into the market for some trade. Otherwise I will keep quiet and do my other stuff, like searching my stocks for swing trades and everything. I will analyze the stocks. There are 5,000 stocks in Indian market. I will analyze one by one for my swing trade for my particular pattern, and I will do that like that. And only if the alert get executed, I will check into this Nifty. Yesterday or day before yesterday, I didn't get any trade, so I waited till 3 o'clock, but I didn't get a trade. And this patience will give you good reward in the future. Okay, so also one thing to note, on expiry days, we should trade very carefully. We should trade in our levels only. We should mark our levels properly, and we should wait for the levels. Otherwise we may get trapped by waiting, and the premium will get decayed, and we will get into a loss finally. So better to not trade after afternoon in expiry days. And if you get only the proper setup, you are that confident, you should take the trade. Okay, anyway, we'll see you tomorrow, and I will update the market tomorrow. Thank you.